Okay, can you hear me, Anup?
Yes, Furkan, I can hear you very well.
Okay, I will share. Let me know if you see my sharing.
Sure.
It's showing the whole thing there.
Yeah,
1 second.
sure.
Do you see sharing?
Yeah,
good?
it's full screen.
Everything okay?
It's full screen. Yep, all okay. All okay. Hello, everyone. Apologies for the delay. There's some technical issues at our end. We'll be starting at 3:30, so please bear with us for another 5 minutes. And again, apologies for any inconvenience caused. Thank you so much. Hello, everyone. Welcome to the Riyadh Cable's third quarter 2023 earnings call. This is Anup Kataria from HSBC Global Research. First of all, apologies for the delay in the call. There were some technical issues at our back end. On the call today, we have from the Riyadh Cables management, Mr. Burkhan Sehovak, the CEO, Mr. Baha Essa, the CFO, and Mr. Muaz Al Yunus, the Chief Strategy Officer. I will now hand over the call to the management. Thank you so much.
Thank you very much. Ladies and gentlemen, thank you for attending Riyadh Cable's 9-month 2023 earnings call. In today's call, we will provide a quick overview of the company. Next, we will shine the light on the company's performance during the first 9 months of 2023. Then we will review the financials for the same period. Afterwards, we will provide a recap on the company's strategy and an update on the market. Lastly, we will discuss management outlook and the way forward. I'll leave it now to Borean, CEO.
Good afternoon, ladies and gentlemen, and welcome to the 9 months earning call of Riyadh Cable Group. I will start always to show this slide for your background. As you know, Riyadh Cable Group is the largest regional player in wire and cables industry since its establishment in 1984. We manufacture, supply all type of cables used in generation, transmission, which means overhead lines, high voltage and extra high voltage cable, distribution, medium voltage and low voltage cable, and end users, low voltage and wires. Together, of course, I want to remind us all that we are producing fiber optical cable used in data transmission. We are able to produce any type of cable needed in the market using our Center of Excellence plants located here in Riyadh, without forgetting to mention our plants in Sharjah, UAE, and in Baghdad, Iraq. So let's see the key performance highlights of the 9 months of the company. The slide shows group financial and operational performance during the 9 months. As you can see, there are fairly good improvements in various metrics compared to the same period of the last year. Revenues were reported at almost 6 billion riyal, highly supported by an increase in sales volume, of course, about 21%, and keeping an excellent utilization rate, again, on the level of 98%. Profitability metrics have also shown significant improvement with approximately 33-34% increase in gross profit per ton, a 51% increase in EBITDA, and an impressive 56% increase in the net profit, reaching the level of 385 million SARS. In these 9 months, we have spent 88 million on CapEx, and this number, I repeat, will be accelerating even more in the last quarter. Important to highlight the record high free cash flow generation, reaching 890 million SAR. So this is an excellent achievement as well. Today, the cash is more king than ever. And the company holds a very low net debt to equity ratio, which went down to 0.3 multiples. We are still holding a very healthy backlog of confirmed orders, means backlog of orders that we have in our SAP system. Even if it is slightly down to 96,000 tons, it is still on the level of 3 billion SAR as in the previous quarters. Very high tendering activities together with 3 billion riyals of backlog, giving us a good degree of comfort towards next quarters. Okay, in this slide showing the key performance drivers, we can see the company recorded 21% increase in sales volume, which was backed by a good level of transmission projects and growing demand, including renewable projects and export. Strong demand-driven revenue increased by 18% as we maintained the market share gained in 2022. For us, it is very important to keep and to try to increase always our market share. Gross profit per ton increased by an excellent 34% as a result of better volume, mix, and cost efficiencies. Net profit increased sharply to 56%, backed by the stronger operating income and firm control on overall costs. Again, I want to repeat the free cash flow reached a record of 890 million, backed by very much efficient working capital management. Moving to the slide number 10, comparing the Q3 with the Q2 of 2023, we have reached a record sales above 2 billion reals due to 11% increase of volume. To mention as well that previous quarter was a bit slower due to holiday period, and we always said that the third quarter would be quite strong, at least as the first quarter, and this has happened. 9 months comparing with the 9 months of previous year is, as you can see, an excellent growth in sales revenue and volumes due to very strong, let's say, local and the GCC demand. As we will show in the later slides, the tender activities are also very good, sign of a strong market. And as mentioned also during last quarter, the share of copper and aluminum normalized to 55-45 split approximately. Moving to the slide 11, we are continuing to have a very strong backlog at the level of 3 billion real, as I mentioned earlier. And this strong demand, of course, is pushing our utilization rate at very high levels, like 98%. I want to stress the fact that the tendering activities as well are more than double. And this is very important to give us how solid is our future. And we are as well consuming the current frame agreement, but at the same time, we are negotiating a new frame agreement, which will be soon, hopefully, become contracts. As mentioned earlier, the company revenue grew by 18% compared to the first half of this year. EBITDA followed the also very good trend with an increase of 50% and above compared to the same period of the last year. Thank you very much. Now I hand it over to Baha for more financial highlights.
Good afternoon, everybody. Looking at the gross profits and the EBITDA for the company, again, the company has managed to increase its gross profits, and this was mainly attributed to increased revenues and product mix plus better efficiencies. So we moved from 237 to 279 from quarter 2 to quarter 3. Looking for the 9-month period, again, we had a healthy increase of 61% from 458 to 735, again, due to the reasons I mentioned earlier. EBITDA, again, the company had a good results for the quarter of 185 million for quarter 3, and again, that has been up from quarter 2. And if we look at the 9-month period, we see the strong jump that we have witnessed from 356 to 538, a 51% increase in our EBITDA for the period, for the 9-month period. Slide. Cash flow. Again, the company, as Florian mentioned, had a very strong free cash flow generation at 889 million riyals, which was attributed mainly to strong profitability for the period and better suppliers' credit that was obtained over the past 12 months, which contributed to this high figure of 889 million. The company also has paid actually out of today 150 million in dividends, which was approved by the board earlier, and should be up to date. And this is again in line with the company's commitment and historic performance in terms of dividends. Now, if we're looking at the hedging and the profitability per ton, again, the company continues its trend of strong profitability despite volatility in the commodity prices, and this is mainly attributed to the hedging mechanisms that we put in place, coupled with vigilant order selection and strong markup strategy and operational efficiencies, which allowed us to continuously increase our profitability. For the 9-month period, it's 4,278 riyals, again up 34% from the same period of last year. As seen on the graphs, the profitability for aluminum gross profit was 4,000, and for the copper it was 4,400 riyals. Next Okay. With that, I hand it over to Max.
Thank you, Baha. As always, here's a refresher on our strategy, which is focused on driving growth and performance based on the 5 main pillars displayed in this slide. Deepening and expanding geographical footprint. During this period, RCG continued to be a major player in the Saudi market. We have increased our market share this year to 36% and continue to maintain our position as a market leader. Also, in this period, in KSA, or our operations in Saudi Arabia contributed 75% of our volumes, while UAE contributed 15%, Iraq was at 5%, and other export markets contributed 5% of our overall volumes. RCG has landed orders from new clients and new international markets during this quarter, such as UK and North Africa, although minor in volume, however, still adding to our international clients list. We continue to enhance our products and services portfolio. We announced yesterday to the market during the Future Energy Show that we will be introducing medium voltage and high voltage accessories products, noting that these products are engineered, designed, and will be produced under full RCG know-how. These products will be first of a kind to be fully manufactured in the Kingdom of Saudi Arabia. Addition to these products will further expand our product portfolio and increase our local content ranking. Introduction of such products also will make us a true solutions provider, as it will enable us to take on full turnkey projects without relying on accessories from other manufacturers for complete cable system supply. The products are expected to be launched to the market in Q2 2024 and Q1 2025 for medium voltage accessories and high voltage accessories, respectively. We continue to improve cost-cutting mechanisms in both operations and company management. During Q3, we completed an efficiency enhancement program from which multiple initiatives were developed to increase overall equipment efficiency and enhance working capital efficiency. And this is very evident by our gross profits and record cash flows. Finally, the company is currently deploying or developing a long-term ESG strategy in which the primary focus is to enhance its environmentally friendly practices and help reduce its carbon footprint and GHG emissions. On the social front, the company made purchases of its own stocks as announced to the market to build treasury stocks for the employee LTI plan. In this slide, we see an overview of the markets in which RCG currently operates and constituting about 95% of our revenues. We can see the attractive growth in the wire and power cable market, both historically over the last 4 years, as well as forward-looking into the 5 years. We can see that Saudi Arabia has the largest market size and share of incremental growth in these markets, followed by Iraq and then the rest of GCC. Demand drivers such as mega and giga projects, renewable energy projects, network upgrades, and network preparation projects are still exhibiting a lot of strength. According to Mead's report issued in August of 2023, giga projects awards in 2023 are likely to reach $31.7 billion. This is an increase of 25% over 2022 levels. In addition, almost $520 billion worth of contracts will be awarded between July 2023 and year 2025. On the renewable energy front, 1.8 gigawatts of renewable energy contracts were awarded in Q3 2023, and an additional 1.8 gigawatts of renewable energy contracts are due to be awarded before the end of 2023. Indicators from company market intelligence and third-party market research studies currently being conducted points towards higher growth rates than the forecasted by ADL that you can see on this screen. These results, or the results of the analysis, suggested the following.
Percentage of sales. Let's say percentage of the sales usually going to the backlog. All those items, let's call what let's say retail
Low
business.
voltage.
Exactly, most low voltage and wires, which of course an excellent volume of production that we are doing and sales that we are doing month over month, but these are on monthly basis rather than on 6 yearly basis. It is in the backlog. In other words, about wires, we have basically most of our backlog because of the business.
And we've seen the backlog is declining quarter, it had in the second quarter, now it is happening in lingering or time, or what is it?
The client says increasing. I like it.
Exactly.
I mean, okay. Apart, no, of course, the backlog is very strong. The backlog is in the same level as you have some fluctuations, no, normal. But if you couple the '96, 100,000 tons. It is exactly same line as previously. That's why I wanted to highlight that our tendering activities are increasing. So it is always a cycle. You need a good tendering activities to be on quite a high end, which will be then transformed in contracts, means in backlog. And at the same time, you are consuming old frame agreements that maybe are on the yearly basis or 18 months basis or even 2 years basis that you are negotiating with your customers for the next long-term frame agreements. So when we look at the backlog, we need always to look at the backlog, at the sales as well, and as a tendering activity, as we are showing here, as an overall, let's say, picture.
Great, that was very informative. My last question is regarding the onerous provision. It was around 90 million for the first half of the year. What is it for this quarter?
For the 9-month period, we stood at 161, I believe, if I'm not mistaken. And again, this is an accumulation over the period.
Maybe he can join the queue once he's back. We'll move on to the next Akash Tomar. Please go ahead.
Thank you very much for the detailed presentation and congratulations on.
Akash, can you speak up a bit louder?
Yes, I was saying thank you for giving me the opportunity to ask a question, and congratulations on another set of strong quarter. I have two questions. The first one is just wanted to get an update on the new capacity addition. So one capacity addition was due to be added in September. So did quarter 3 had an impact from that higher capacity, or is it still to come? And what is the come in Q1 24? Is it on track, or are you delaying it or any color on. So we already are at 4,200 gross profit per ton, which is 26% higher than the 2022 average. So I know you can't give a color for a very long time duration, but just wanted to get an idea. Is this high gross profit per ton, is it denominated by one or two big contracts? And once those contracts are, once those contracts taper off, this will lead to dilution, or is it like you are seeing in all the contracts higher margins? Thank you.
Thank you, Akash. I will answer to the last question, then Muaz can answer to the first one. Gross profit per ton, which is good, healthy, and even increasing. Increasing, of course, compared to the previous, but increasing slightly compared to the previous quarters. And this is exactly what we have anticipated, because we are saying that we have put into the market quite niche products like extra high voltage and general transmission. These kind of products are very good. I mean, we always say that all the mega giga projects, infrastructure is needed in the country. For any project, first you build infrastructure, where these kind of products are the first one to come. Means transmissions, means high and extra high voltage, which have quite good profitability because of its nature. It is a technological niche that only few have in the world, and we are among few as well, in the very few, let's say, in the region of having this kind of product in-house. On top of this, let's not forget efficiencies. Muaz mentioned a few times how strict are we in efficiencies in our machineries, how are we controlling it, and controlling, of course, the cost from any point of view, which gives as well a good profitability. Is this sustainable or not? We are saying it's sustainable quarter over quarter. I'm not seeing it increasing another 20% or so for the next year. I mean, if next year in this period, I will not be seeing a 20% increase over the same period of the previous year. But what are we saying as well is that we are investing in the sorry, I believe we should be all muted. We are investing in this extra high voltage, in this transmission, and the one line as well is becoming soon, because this is what it is the mostly needed in the country for the infrastructure and as well in the region. We see good backlog for the next 12 months. The backlog, good backlog means as well that the pricing and the costing is fixed. The pricing is fixed as well. So we see this sustainable for the next, let's say, 12 months. Sustainable at this level, not sustainable with the same growth year over year. I hope, Arkash, I gave you a free answer.
Yeah,
For the investment point of view, Muaz, please proceed.
Regarding your question about the expansion, so the first phase of the expansion has been, I would say, 90% complete. This is the addition of the overhead power line expansions. Some of the equipment are online already, and some of them are still under commissioning, but deliveries has been made, the civil works have been completed, and so on. So we should realize some revenues from it fully in Q4. Now, as far as the second phase, as you mentioned, it should be online in Q1 2024, and currently it's all on track. No delays. I mean, we have the equipment and it's all under commissioning now.
So the second phase, yes, end of Q1, it will be arriving. Some equipment already arrived. We already started the works. Q2, I mean, we need for the second phase, it is a little bit longer, the commissioning. So we believe that end of Q2, we will be seeing the volumes from the additional capacity that we are putting, because it takes a little bit longer to be commissioned. You know, there are lines which are high tech and there are lines which are low tech. The high tech lines needs a longer time for the delivery, for the commissioning, and this is one that we are expecting, let's say, June next year onwards.
That's really helpful. Thank you, and all the best for the next quarter.
Thank you, Akash.
Thank you. We'll move on to the next question from Fawaz. Please go ahead.
Yes, first of all, I'd like to thank you, gentlemen, for taking the time of managing this call, and congratulations on the great results. My question is basically regarding the strategy Mr. Maad mentioned. It were around the products of the medium and high voltage products. So are we, can you please shed some light on that? Are we looking that the company will start, let's say, manufacturing or producing their own transmission, switching gears, and products that are related within that area? And if so, would that impact the capex moving on forward? So we might see another increase in the capex for that expansion, or will it be within the same facilities, or using the internal resources for that?
All right, thank you. So just to be clear, what we're adding here, it's not switchgear or breakers or sockets or none of that. What we're adding here are cable accessories, which are joints that are used to connect two cables that come from two different drums, and terminations that are used to land the cable on the transformers or the switchgear devices. These terminations and joints are made for medium voltage products and high voltage products, and eventually extra high voltage products, obviously. So, I mean, currently, where we're at with this project is that it was included in our CapEx plans. So all the numbers that were forecasted as far as the CapEx spending, these projects are included in it. And as we mentioned, they're engineered, developed, designed, tested, all by local Riyadh Cables know-how. And we expect them to be out to the market in the end of Q2 2024 for medium voltage, and then Q4 2024 for high voltage. The biggest advantage of these products, as we mentioned, is that there's no such manufacturing of these products locally. They're currently being imported, not of the same scale and of the same capacity. This is one, or the same technology. In addition, they would help us a lot in being a complete solution provider, where it would complement our product lines. We're supplying cables today and having to purchase accessories from outside. Now we can offer a complete system by Riyadh Cables. So that adds to our revenues, obviously, as far as the sales of these products. In addition, revenues coming from the service work.
Thank you so much, Mr. Maad. Just another question regarding the market demand that you're just want to take your let's say overview about the outlook of the demand, especially with the large scale of housing projects and housing sector in the upcoming years, let's say in 2027, 2028, and it's more of the long term. Do you see demand higher than the current levels? Do you have any ideas on that? If you can share them, I'd be grateful.
Well, as far as what we know, based on the research and based on what we see as far as the plans for awarding and execution and so on of giga projects and others, we know that 2024, the end of 2024 and 2025 are going to be peak years as far as demand. Now, is the demand going to change from what we're seeing now to low voltage and building wire and such? We don't expect it to be changing a lot. Are we going to see an improvement in the housing sector? Hopefully, it's going to be tied to the interest rates and what happens with it, because interest rates are affecting the housing sector. It has been a steady sector for us during this year. We haven't seen growth in it as much as we've seen with the other sectors that are driven by other demand drivers. Now, as far as 2027, 2028, I mean, we're going to need a crystal ball to be able to tell you on this. It's kind of hard to anticipate that far. However, from the market studies we have, I mean, we know that the market's going to grow at least at 8.3 CAGR from now until 2027. But Again, we conducted other studies with other consultants that are not 100% complete yet, and they're indicating that it's going to be about an 11% CAGR for the same period. So that's probably the best information I can give.
Thank you so much. That was very clear and very insightful.
Yes.
Thank you, Fawaz. Moving on to the next question from Sangam. Your line is unmuted. Please go ahead.
Yeah, hi. Couple of questions. One was on the order pipeline. You sounded quite bullish on the order pipeline, and
sorry, we lost you. Can you say that again? You broke up.
Oh, sorry. Can you just provide us some idea in terms of the timeline between tendering for the orders and the final awarding of the orders? How is that moving now? Of late.
Yes, I can answer about the cycle of tendering, then contract backlog and execution. So some tenders can take even 9 months. Okay, so the tendering depends on which kind of project, frame agreement, utilities, etc. But can take from 1 month to, let's say, 6-9 months even. Negotiation, tendering, planning, etc. Then usually this, of course, then if we are successful, and usually the tendering activity, our hit rates reflects as well our market share percentage. Then the tenders are commuted, let's say, translated in the orders, contracts, when we book all the metals and all the costs, let's say, are hedged and fixed. And then the backlog is executed from a couple of months up to even 18 months. So today we have visibility on some projects even on a 12-18 months delivery, because as said, the infrastructure takes long, and that's the first phase of any mega or giga project. First, the infrastructure, because it takes the longest to be planned and executed, and then distribution, medium voltage cables distribution, or low voltage and wires for the housing will come into the game later on.
Got it. So in terms of your profitability, when you mentioned that your gross profit per ton in absolute terms should more or less be here, if not increase a lot. Change in mix between high voltage, extra high voltage, etc. As and when they come in, like in 2024 and 2025, when these large mega and giga projects are going to be ordered or contracted. How should one look at the gross profit? Does it change with the change in mix, or because of the disciplined pricing mechanism, the gross profit per ton remains similar across your segments?
Okay, it's quite simple. No, we always say that the higher is the voltage level, higher is the niche of the cable, so higher is the technology, and higher is the profitability because you have less competitors. And this is the mix that we are seeing today. If tomorrow we have zero high or extra high voltage, and we have all the wires where we have 7 competitors, and all low voltage cables, copper or aluminum, where we have 5 competitors, and all our lines are doing the low end products, of course, the profitability will go down. Of course. So today we are seeing better mix, good volumes, good efficiencies, good utilization, which is as well bringing quite good and steadily, let's say, profit per ton. We expect this mix to be very similar in the future, because those mega giga projects are just starting now. The demand, we did not see yet the big demand of many of the mega or giga projects which has been announced. Today we are still executing the demand of the project which has been announced years ago. And today we can see those execution, King Salman Park or MBS Road or Qiddiya. So those projects that the excavation started and infrastructure started, and the projects are 30-40% under execution. NEOM will start surely, because today we are doing some transmission projects to bring the infrastructure to NEOM. And surely in the next months, this will be as well accelerating from the let's say tendering point of view. So we expect that the mix will be similar, no, similar. I don't expect the mix or the profitability to grow next year 20-30% like this year, because saying that the mix will be similar means that we'll be seeing similar profitability if we are well saturated and keeping under control our efficiencies as we're doing. So the level of 4,000 plus gross profit per ton is something that we are seeing for the next couple of quarters, surely. And our game is to have additional volume and to add additional capacity, because we want to have a good market share, gaining our market share in a good market. So we want to have more revenues and more volume. And this was always, let's say, mentioned in our equity story. No? So I hope I gave I shed a little bit more light on it. Yeah.
Definitely, that was really helpful. Just on terms of the blended volume increase that one can expect going into 2024 with both the capacities coming on full stream, how much is the blended increase that one can look at in terms of the capacity increase compared to 2023?
Yeah, we have declared these numbers, and we can reconfirm the same numbers. We said that let's say as an overall capacity, it will be around 6-7% of increase of the overall capacity if you see it as an overall quantity of tons.
I mean, as far as the quantity of tons across all products, it would be about 36,000 tons over the year and a half.
Okay, thank you, and all the best.
Yeah.
Congratulations.
Thank you.
Thank you.
Thank you. We'll move on to the next question from Salman. Your line is unmuted. Please go ahead.
Yes. Congratulations for your impressive set of results. And thank you for conducting this call. So I have a couple of questions. So the first question, how do you see the current progression for the current projects, means King Salman Park and MBS Road?
Yes, the progression is sorry. Can you hear me now? Let's try again. Sorry, Salman. So the progression is doing very well. King Salman Park is executing. We have successfully delivered a good part of extra high voltage cables, which were needed to bring the infrastructure. Some parts still to be delivered. Plus, then it will be triggering other segments of cables like medium voltage cables, and then the lowest end like low voltage cables. And this is the nature of the project cycle. MBS project as well, quite a good delivery. We have successfully delivered more than 50% of the project. It is doing well. Some maybe delay from execution point of view, from the cable laying point of view, but the project is progressing also very well. So in the end, I always like to say, no, when you drive in Riyadh and you see the progress by yourself, no, you see all the excavations. When you see the excavations, means as well the transmission is coming. When you see the cement, means between the cement, let's say, and the transmission, then you have some distribution, medium voltage cable. And when you see the cement, low voltage cable and wires will be coming. So this is in the end some kind of a cycle of project nature.
Thank you for your such insightful answer. Or I have a second question about, if you allow me, about the guidance. So you're guiding from 25 to 35% growth for the full year, this year, 2023 full year. So if you, for your such an impressive result for the 9 months, we may see a decline in Q4.
So is there any explain for that, or do you have any? Yes, I understand the question and appreciate it. We don't see any potential threat. Are we a bit conservative? Yes. Will be, you mentioned 25, 35. Yes, this was our previous guidance, but we are also saying that we'll be 35 plus. So we can forget the lower end of the guidance, but only the higher end and a little bit above. So yes, we will be ending, as said, 480 million possibly, and a little bit more. Do we see any slowdown Q4? Year end, no, you never know. Some customer can a little bit squeeze the budget and then start ordering for the January. So we don't see any risk, big risk, to tell you the truth. Maybe some shift can go from December to January. You know what means that January will be stronger than December, and or vice versa. So, but we don't see any risk or anything that should give us concern on the last quarter of the year.
Very great. Thank you so much.
Thank you, Salman. We'll move on to the next question from Izul. Your line is unmuted. Please go ahead.
Hi. Okay. Thank you for taking my question. I have a couple of questions. One is in terms of your capex guidance for the second expansion. Would it still be, or what was the amount of the capex guidance for the second expansion next year? And second, whether your SG&A guidance of 3 to 4% of sales still remained. And thirdly, how do you plan for your borrowings? What I mean is, how do you plan for your borrowings given the order? I mean, do you secure the contract first, then only you source for the funding, or how does it work from your end?
I will give you the first answer about the SG&A, then I will pass it to Baha for the borrowing, which I believe simple answers, and to Muaz about the first and second phase. SG&A 3 to 4%. I always say 3% is the cap. Okay, today we are 2.9, 2.95. Yes, we are increasing the people, we are increasing it, but we are keeping it under control. So 3% level, it is our target. 4%, I believe it is quite high, but 3%, below 3 is the perfect. But you know, you need to grow as well with SG&A. But yet 3% is our that we have seen and what is have in our target and what we have as well in our target for the future. Baha, please, your answer for the borrowings, if it is on the project based or how we are dealing with it.
No, most of our borrowing is related to working capital, regardless of where the projects are coming. So as you can see, I mean, over the past year, we've been reducing our borrowings because we were able to generate our cash from getting better credit supplier terms, which is reflected in the cash flow of the company. And that allowed us to finance the capex so far from our own cash and pay out the dividends from our own cash and still have enough reserves left. So I don't see an increase in the borrowing over the next year, unless something, unless we go into a major expansion program. But aside from this, I think we're at the levels we are at 800 million riyals, give or take 100 million. I think will continue to be the case for the next year.
Okay, as far as the capex, what we have expected to spend the 200 million this year, that includes phase 1, and it includes partial of phase 2, because some of these installations and the commissioning are not fully paid for until we run them in a production environment and we prove that the equipment is satisfactory and running to our standards. And that's when we do the final payments. So, I mean, you would see most of it is going to be in this year and then partial next year.
Okay, thank you very much.
Thank you. Okay, we have some questions in the chat box. I will pick a couple of them because given the paucity of time, we'll just do a couple of them, and then the participants are welcome to reach out, offline if they have any follow-ups on the, uh, on the presentation. So the first one is from Chintan. Do we expect market share gains for Riyadh Cables once we have the new capacity coming online?
Well, our plans to grow market share are not currently hindered by any capacity restraints. So currently, we do not turn down any orders for delivery. And that's been our unwritten policy, and this is something that we strive to do. The expansions are happening. As I mentioned earlier, we have one phase that's almost is complete, and we're realizing some volumes from it now. Or actually in Q4, not Q3. And the rest are coming very soon. So far, we haven't seen where we had to decline any orders for deliveries. So market share growth, obviously, is to continue to utilize our capacity, keeping in mind that market share growth in a growing market can be a tough task. So maintaining market share and growing it by 0.5%, say, next year, that can be still a challenge because it's a growing market.
Understood. Thank you so much. The next question we have is, what percentage of total revenue is generated by the high index voltage product, which has been noted for supporting the overall profit margin?
So the higher end product, it is what we defined transmission. Transmission means high, extra high and overhead lines. Overall, around 25% of our overall revenues is coming from these products.
Got it. I think a couple of the questions on the new capacity has already been addressed, so I'm skipping that. There's one question from Faisal. The second question that he has is regarding the increased operational expenses. We have noticed a spike during the quarter, mainly due to the increased provisions. Excuse me. Or is there any other item? Any clarification on this would be much appreciated.
Thank you. The increase that you see in provision is related to mostly receivables. And this is as a result of applying the IFRS 9 rule, which applies certain formulas to anticipate or to calculate the expected credit loss. So what we have seen here is because some projects or some receivables that we have passed a certain period, and this is mostly related to our operations in Iraq, the calculations ended up with additional provisions, regardless of whether there is a true risk to these receivables or not. Now, a good portion of this amount has been already collected during the month of October. Almost, I would say, about 35 to 40% of that additional 41 million that you see has been collected in October. And we expect more to be collected by year end.
Got it. Okay, the last question. Can you give some guidance on 2024, if at all?
Today, we are not in position to give the guidance on 2024. What we have seen is the market, and the market demand is good. The research, independent research as well, are confirming a good market increase. And we are seeing good and strong backlog. But to give you today the number, how much it will be, I'm not comfortable to do it now. Let's wait a couple of months or weeks, but should be a good year.
Fair enough. Thanks, Burkan. I think we are mostly done with the questions. If there's any follow-up, please feel free to reach out. I will now hand it over to the management for their closing remarks.
Okay, ladies and gentlemen, thank you very much. We are sorry for some trouble that we have faced at the beginning of the call. I'm really happy about, we are all happy about the results, we are all happy about the company, but most of everything, we are happy about the country development, the good projects coming within the country, and about let's say, the healthy future about energy transition, renewable energy, interconnection, energy safety. And I always repeat that any kind of development of a country or any kind of projects needs cables, and we are here to serve that demand.
Due to the time constraints, we didn't get to answer some of the questions that were in the chat box. If you still think that they weren't answered, please email us at ir@riyadhcables.com. Thank you.
Thank you all.
Thank
Have
you.
a good afternoon.
Thank you so much. Have a good day.